Welcome to another session of Let's Talk Stocks. I'm Sasha Evdokov, and this is episode number 81. So in this episode, I'm going to do something a little bit differently, actually in part due to because I have to go to a doctor's appointment. So I'm going to go ahead and record little bits and pieces throughout the day of the market to do my recap because I'm not sure how long I'll be gone. So as I come back and go and do things and run around a little bit, I'm going to share with you the trading, the intraday action, as well as the emotions, my thought process, what I'm looking at, and just give you some insight to some of the charts, some of the support resistance levels of the SPY and SPX. So we're really going to drill into that. I'm going to show you some things probably with emotions, how they play out, and how people get really, really psyched up or excited, but then also why you shouldn't really buy into those things. So just enjoy the lesson, enjoy the time looking over the intraday chart. Again, some of these concepts I share with you, really you want to also apply more so to the daily charts. Really, the big picture, I'm always looking at the daily, the weekly, and the monthly charts. So those are the key. But looking at the intraday, if you're watching the intraday, how to spot things to start to roll over, this will give you some key signals because I noticed some things yesterday where stocks were acting a little bit weak and where stocks were actually looking like they may start to roll over today. And that's what I'm going to share with you. So enjoy the lesson, enjoy the episode, and here it is. I'm here taking a look at the, this is my Roth IRA account. And if you want to still use a Roth IRA account, basically I got this Roth IRA account when I was a lot younger. And now when you make more than, I don't remember if it's $75,000, but once you start making more money, you won't be able to open up a Roth IRA account, at least not from my understanding. So the way to really go against this or to do it with a loophole, there's a tax loophole that you can talk to your accountant or even contact your trading panel. What you do is you'll deposit the funds into your standard IRA account and then you'll convert it over. So there's a conversion method that you could do. And that kind of helps on the tax planning in order to have a Roth IRA account. So anyways, you can contact your accountant to get some insight about that. So anyways, I'm just playing around in here, and I just wanted to just do some insight to show you what I'm looking at when I'm watching these trades. Normally, I don't look at the 1-minute chart. The 1-minute chart is typically for day traders, but sometimes you get some insight to these 1-minute charts, and the insight that you get and the way that I have this set up here is when I look at the filter size of what's going on the sales. If you look at what's greater than or equal to about 3,000, maybe 5,000 shares that's being traded, what you want to do is just start looking at this time in sales. And right now it is 9:41 here in the morning, so the market is just being open. But here what I'm seeing is when you look at this open right here, typically I don't like trading the first half hour just because of the reversals that can happen. But when you start seeing, here's the key signs that show me things are in a sell-off mode. Typically, if you look at the end of the day, now we look at all of these end of the days, and when you look at the end of the day pattern, you can see this bowl shape of volume pattern that happens. This is called the meta pattern or a meta volume pattern. You can call it whatever you want. It's just a basic standard pattern because there's more volume at trading at the beginning and there's more volume towards the end. Now, typically what we've had is we've typically had some strength coming into the closes, or neutrality. So when you look at the previous days and you start scrolling, you can see that we've had some neutrality, maybe a little bit of day traders taking profit, or a flat close, okay? Some of the days we have a power into the close, and when you have a power into the close, you may get the next day to follow through, which like you did here. You got to follow through a little bit, a little profit taking, and then again, and then a flat close. What we had here the previous day was actually we had a power to the highs here at the 210s, and then we had a major sell-off reversal that took it down within an hour. And now when I start looking at this time and sales of about 5,000 shares or more, I don't look at I don't look at the time and sales of, let's say, 200 shares, because what's happening is there's a lot of basic day traders or retail traders, and really we don't care about when people are taking some profits or taking some profits in the strength. Really, to me, that doesn't matter. Instead, what I'm looking at is really somewhere around about a 3,000 share lot size. Now, if it's a different kind of stock, maybe it trades even heavier. You might look at a 10,000, 5,000, whatever. With the SPYs, 3,000, 5,000 is pretty good. If you go to the 5,000 range, right here with the 5,000 range, you can see that there's a lot more red than there is really green, and it doesn't take a rocket scientist to look at colors. So as you start looking at these time and sales, there's a lot of selling pressure that's coming in, which to me, that's one key sign that tells me the market's setting up for lower prices. This is subtle signals, of course. The bigger picture is actually looking at the volume. So here's another signal that you can see the volume right there. The volume is weak as we do the pop, and the volume that people are trading is also weak when we look at the bullish signals here on the time and sales. That's also weak. Then I'm also looking at the spider volume, and then here, look at this volume, right? What's going on here? Okay, so if I zoom out, this pattern is easier to see. You can see that this pattern here is a little bit of a bowl-shaped pattern right there. This pattern, the average of that is more like a flat pattern, okay? So you can see that here we move sideways. Here we kind of did a bowl-shaped pattern. Of course, there's some other little signals in there because we did have some ups and downs, which you can see right there. There's a little drop-off, little volume pattern there. But really now, as this move has been moving to this upside, we've had this descending pattern. And really, if we do it even tighter, the higher spikes are the earlier bearish spikes. So as we get into this level, and we look back at this range of these highs, the volume that we had that tried to take it out was, when we look at these highs, some of these were 343 million. Some of these were 500 million. So in here, when we're trading only 80 million or 100 million, we don't have enough volume to take it out. So that to me tells me that that we're set up for lower prices. Now here, this bounce right here, when you look at this bounce, you can see that right here, we tried to take out those lows previously, 506 million shares with volume, but we didn't do it. So then what happens when we retested it? We tested it with 286.4 million. Didn't happen. We tested it at 191. Didn't happen. We tested it at 219. Still didn't break the 506 million. So what happened? Well, we pop a little bit more, and now we're getting into, again, some of that resistance level at the top, which could, sorry, I had a phone call there. So to me here, when I'm watching this and I'm seeing it to get into these higher prices, that to me shows me, if it's doing it on lighter volume and then I'm looking at all the other signals, it shows me that there's weakness within this pop. Now, does that mean we can't hang out here for a couple more days? If we could hang out here, just like over here, back here for a week or a month, we could hang out there and then roll back over. So those things can take time. So you need to be patient. But you can see that here, as just waiting for the last couple of minutes, while I was here on the phone call and just chatting on those charts, that this market continues to roll a bit further. And as you watch this volume will start picking in, it slowly starts to create a snowball effect. So what is it that really happens? Well, what happens is, first, the day traders start to short it potentially. It doesn't always happen in this way. It happens in a lot of other ways, multi-dimensional, in the way that all these things start to happen all at once. So day traders will start to short it. Then as those day traders start to short it, these stocks start to head lower. Then the people who went long, the retail investors, the ones who were buying on these little dips or buying on this little dip, now they start getting into this fearful mode that, oh, maybe they're starting to head lower. This is typically the newer traders, people who are, short term still. And then they start selling their positions. So as you can see now, we continue to kind of push down, okay? Then you have some shorts. What's going to happen is we get this little reversal that'll probably start to pop a little bit here within that first 10, 20, 30 minutes if you do get it. If you get it, what's going to happen is those day traders, some of them may take some profits or half profits. And for that reason, if you go look at the 200 share count. So what may start to happen is some of those day traders will start taking profits, and that's what takes these stocks back higher. And then you'll get, as we start hitting new levels, people start getting more and more fearful. So that's really what happens, and that's what happens on shorting these positions, or not shorting, but on these bearish sell-offs, is that these triggers start to hit, the emotional triggers. And as we start hitting these emotional triggers within one person, then the next person, then that just slowly starts to spiral it down. And that's why emotional selling, stocks typically, they crash down, they don't crash up. So when are people more emotional? When they're fearful. So as you start, there's the little bit of a pop here now you're having. Potentially these are some of the day traders taking some profits. So we'll see here. They might take it up to 209. They could even take it up to 2010 and then comes back. So what happens is then they'll start taking some profits, and then again you get the next wave down of people who missed this move start to come in. And as they start coming in, this typically sends those stocks even further lower. And the way I look at it is that if this volume, and again, I don't look at the 1 minute chart, I'm just using this because it's an easy reference example to chat about it as we look at this chart moving. So what happens is that as you look at this volume, if the volume isn't picking up on this pop or on these pops, then you'll see the next leg down. Now, if you see volume coming in, then they can take it back. They meaning the bulls in this scenario. Now, sometimes when we talked about the manipulation factor that happens, sometimes what happens is these hedge funds, as you've listened to that interview there and so forth, they will spike it. They'll spike it to try to fake people in, that people say, oh, it's another kind of bullish day, so let me buy it on this dip. And that's where you get the, I guess it's called the dumb money or the suckers. And, I was one of those as well. But basically what happens is that people get faked out. They try and start buying it right here, or even let's just say they pop it to the 210 or the 211, wherever. They pop it to a higher price, a few points. They could do it for a couple days even. And then they rip out that rug from under you, which is really what happened if you look at it on the 5 minute. Over here, again, use the daily chart. I'm just using this as an example because it's an easy teaching lesson. Use the daily chart when looking at your charts. It happens on the daily as well. Basically, what's happening here is they'll spike it higher for a while. For that whole day, they were holding up prices only to rip it out from under you. So that's what happens really, is that they rip it out. And here, if you're looking at it on an intraday, the same thing happens. They may get it to the 210 and then they rip it back. And again, what happens then is they're trying to suck in more buyers, more people that, hey, the prices are going higher. Hey, the prices are going to continue going higher. So buy more shares, buy more shares. You can buy my shares. And then they sell it right into you. And then when they sell it into you, buy those shares, and they're still trying to get out. So really, that's what it comes down to. That's what you're watching, and that's kind of what happens on these moves. We'll have to take a look at how the day continues to evolve. But you can see here already we're starting to continue this reversal. So we'll take a look at this, and then we'll get back to you. All right, so we are now right around the 10 o'clock, so past the half-hour mark, and it is a light day for me. So that's actually why I'm recording this. I have to go visit allergy testing doctor here, so I'm doing a little video recording, light trading for me. But I was positioned a little more to the bearish side. But here, again, I want to share with you some intraday action because I haven't really shared that in the past. So now we were down in this level here where stocks were selling off, and then we had that pop. And I told you that we could get this pop and then things could start to roll over. So what is it that's happening, or what is it that I'm watching? Again, normally you don't really watch this on the 1 minute, but if you want to watch the day trading action, you look at how strong these are. So for me, what I look at is, okay, if you break this down tick by tick, we had some higher prices here. Okay, so we had a little bit of higher prices of, let's say, here we had 0.25 million, and then we had 0.34 million, 0.36 million on these two ticks. Then we started to press down on it, and again we pressed down, we opened a little higher, moved down, then we tried to pop it again, and we popped it again, but then we continue to press. Okay, so we're opening and we're closing lower, we're opening, we're closing lower. Then we opened, we tried to get higher, but we almost closed lower. We open, we close lower, we open, we close lower, and now again we're trying to push it. So I'm watching, okay, how strong is that push? How strong is that push on the volume? So here, if the people are not buying enough, you can see, boom, we tried to go higher, didn't do it, and now we're trying to push it lower. So you can see that the momentum, the energy is pressing it lower, which slowly starts, let's say there's 500 people in a room. So let's say one of these people is now starting to roll over. Oh, I'm getting really nervous. And then boom, he starts selling his positions. Then the next guy, as this continues to move lower, that guy number 499, he's now starting to get lower because these prices are getting into his range or his wiggle room. Then he'll start to get lower. Then you got the other room. Where it's, oh, these are pretty cheap. Let me go ahead and buy some. Let me buy a few shares. This is a good value because the stocks are going to pop higher all the way to $250. It's going to pop there. So it's the guy, the dreamer or whatever. So anyways, you got all these different people playing it. So what you're trying to do is assess the overall room. What room is more powerful? Is it the guys that are selling it? Who's trading more on the emotion? So you can see that here we had this doji right there coming back. So that means to me that still there's some fear, a little bit of fear. Now, if these things kept tanking like solid lines down, there would be way more fear in there. This to me shows you it's just moderate fear. It's not huge, and we could be settling, trying to find a bounce point still to this 2010 level or somewhere higher. It doesn't matter really where the level is. My goal is to try to explain to you the overall emotions that right now are going through for these people, for these traders that are happening. And you can see now the buying sentiment is starting to pick up. You can see we have a couple of bullish ticks. We have 3 bullish ticks on the 1 minute. Now this is the 1 minute. I mean, these are typically day traders. If we go to the 5 minute, now you start to get a little bit of a better position. Okay, so on a 5 minute basis, this is where the bullishness is starting to come in at this price level. Okay, because we had bearishness for a few ticks, a little bullish pop, more bearishness, and now we're getting volume starting to come in. So this could be a bounce point. So as I look at this, okay, let's take this time and sales off. As I look at this, if you take a look at the 15 minute, you start evaluating it. Where are we going? Well, you can see we're getting into now this gap range. Okay, we're getting into this gap range because we have this gap right here. Now, yes, we did fill it here, and you're probably thinking, oh, we filled it already. But even though we filled it, there's still a gap there, which means there's less trading action that's there. We also have support right here. We also have support right here. So it's going to take a little bit of time to break it. If right now we're on a 15 minute, if right now we get, how many shares were traded? 2.7 million. If we get 2.7 million on this tick to the downside, you will see this break and get into this support range into the 209.28. And you can see it kind of wiggling in that range right now. It's trying to go red. And that is because we have to digest all those people that are in that room, 400 people, 300 people. It's hundreds of thousands of people. It's really trading. It's those shares. It's not just people. It's the share count that people need to turn over and say, okay, I'm scared. The market's probably going lower. And the more that we keep hanging out at the lower levels, the more people get worried, and then it slowly starts to head fake them. It dips a little below that, then they sell. Then the next guy starts to get worried. It's breaking this level. So that's really what ends up happening. And as you continue to draw this out, as you go further and further out, let's see here what's happening. As we go to the 1 hour, you probably won't be able to see it here because it's been a while since we were at these levels. All the way over to here, there's probably a range. I'd have to take a look. We're at 209. There's probably at a range. Let's just take a look over here on the TC2000. So over here at this range, there's probably some range right there over here, which here we'll zoom in. Probably this level right here as well that are really minor support and resistance levels. Now, for me personally, I don't really watch those levels, but I'm just showing you that this is how it works. This is how all these things work together and play together. As you start putting these things together, the intraday chart is very weak. It's not very strong. So that's why for me, I trade off of the daily. So I will check this chart, and let's say I look at a support and resistance, and let's say that's a support and resistance line. Then what I'll do is I'll check the 30-minute, and I'll see if it's breaking that level. If it's not, then I'm back into my daily chart. So that's the way I do it. And for me, the resistance bands and support bands are typically bands, not just lines. Okay, so I'm looking here at this level, and I'm watching like right here. Let's go back and take a look. So as you go to your 5-minute, again, I don't watch the 5-minute, but you see right here what happens is they start breaking. As they start breaking, it starts to fake these people out. It starts to get into their heads, get into their emotions. And some people are going to try to buy on that dip, and that's why you'll see these higher prices. But really, you're watching more on a daily basis, to see that overall. Exactly what we're doing right now, you want to watch that on the daily. So forget what I just told you all about that intraday in the sense of just looking at the intraday. Take what I just showed you and apply it to the daily. Because now if I look at it right here on the daily, you look at this volume that we went back and started this lesson with. The decrease in this volume right here shows me some weakness. It shows me weakness. So this stretches your timeline a bit, but it shows you the bigger picture. Now, yes, you can trade within that intraday and be a day trader, and you can do a lot of trading within that, and you can do fine. You can make good money. But it's more of a focused trading. You can't really leave your chair, your computer screens. Whereas if you're trading more on a swing trade, if you're trading more on a longer term time frame, you can leave your screen, you can go and do what you need to do for the day, come back and then reevaluate that day, that tick, because when you're doing little pullbacks like this in this consolidation pattern, and understand, okay, there's a little consolidation pattern, and then they'll try to take it higher, little consolidation, they'll try to take it higher. But they can only take it higher for so long. Eventually that air gets exhausted. Okay, that air gets exhausted. A market is not going to go straight up forever. It's not going to happen. There's just no way. Human emotions are going to get in the way. So for you need to take those things and apply it to the daily, because now, once you got the daily action moving, the intraday is going to whip around with the day traders, with the shorter term traders, and that's fine. And you can do that. You can day trade. There's nothing wrong with that, but it's faster paced. But if you want to day trade and you have the daily charts in your favor, that's when it's better. Not to mention, ideally, If you're day trading, you shouldn't be day trading with the VIX. If we got the VIX right here at 12.13, the better time to day trade is a VIX at 15, 16, 20, 24, 30. That's the better time to day trade, because if you're looking at the day trading opportunities, it's going to be the whipsaw action like we have on these markets, like we did over here. These are high volatility times when the market will bounce around. That's the perfect time to day trade. This right here is a great time to day trade. This right here is also a good time to day trade. After that, not as much. Okay, this whole range is a good time to day trade. Okay, those are good day trading times. This part maybe a little bit to day trade, and this part as well. But you check the VIX, you look at how the volatility is. That as well could be a good time to day trade. But overall, so you might have, let's say, on the volatilities, you might have certain good opportunities to day trade, but then others, when you're just moving sideways, there's no point to really day trade. And especially if the market keeps crawling up lightly, there's no point to day trade. The thing is you're setting up your positions for the next move. And here on this next move, when I'm watching it, we're at the highs. Where is the risk? The risk is to fall back down, right? To go back higher, you might get the higher highs over here. I don't mean to be a pessimist, but I'm trying to be more of a realist rather than a pessimist. Realistically, the stocks can go here and they can break out. That's fantastic. Great news. Yes, people make money. Yes, their retirement continues to grow. Sounds fantastic. But is it realistic? Is this move realistic? And, if it's not realistic, then prices will come back down. Okay, eventually things will unfold. So you just want to pay close attention to those moves. And when you're watching this, whether it's the intraday like here or the daily, you want to pay close attention to the volume and how prices are reacting, because they do move these prices. They push them higher. They push them higher into try to get them to bounce a bit, but then they'll roll back over because now we're under that 21 or 210. So if you look at the S&P, we're under 2100. So now what do stock prices normally do? They try to come back, retest this, and then they typically roll back over, okay, because that's a key level. That's a key level of support and resistance. So we'll see if we get there. It's not always the case. We might get into 2102 because you can see that level is right there. Let's take a look at the 15-minute. Again, you want to watch this on the daily. But see, look at this range right here. You have this range to this range. That's a very key resistance level. So anywhere in here, you might get up to this range and level somewhere and then pull back. So you'll see. I don't know what's going to happen at the day for the day, but you'll have to take a look and see what happens. All right, so welcome back. It is 2:10, right around there, Eastern time, and I just got back from the doctor. They did a couple of allergy tests. In fact, here this last weekend, with all the spring coming around, we did a little bit of gardening, and here we're getting ready to plant some cucumbers and onions and, little things like that, like basil. And then they were also removing a few trees there. And getting rid of a few trees, and my whole face just swelled up. Anyway, so I decided, okay, well, 'tis the season to go and get a few things checked up. Normally, I hate going to the doctors just because, you got to go and spend a lot of time, and then you got to go and go again and come back, and there's a lot of back and forth, which is really annoying because there's a lot of I guess the doctors these days, they're really scared about these lawsuits and things like that happen. So for me, if they ask, can you release patient records? I just say, everybody, just whoever calls in, just give them my patient records. Honestly, I don't really care. But for a lot of times they want to do tests and more tests to really just protect themselves. And same thing happened when I was doing my appendix. They wanted to do a lot of tests, and later on, basically, my mom came in. I was already out of it. And she said, are you going to cut him open anyway? And they're like, yes, we're gonna cut him open to figure out what's wrong anyway, because my stomach there was hurting. So they said, enough with all these tests, because they were doing tests for about 10 hours. And she said, well, just go ahead and do it. We can sign a form that we're not going to sue you. And then they started to look at us and say, okay, well, in that case, let's move forward. So anyways, long story short, there's a lot of playing around that happens. And I guess you could say same thing happens in the markets. There's a lot of playing around that happens. And for me, I just would rather get to the point. And we all want it to just kind of move in our favor, but you got to do this back and forth dance. And this is what's going on here with this market right here is, if you look at this market right here, you got some things that we talked about were popping till the 2010. And if I draw out this little resistance line, you see that they played around with it and they wanted to spike it. It got a little bit over that level and then it continued to roll over. And you'll see a lot of people that'll pump it. And you see that this is right here is confluence. Now, for me, like I said, you don't want to just watch the intraday, but if you're looking at the intraday, it gives you clues and signs. So right now we're on the 15-minute. And you can see that as we have these green bars, the volume that we have there is less. So if you compare the last couple of 15 minutes, okay, then you look at the green bar of the 15-minute, you see the pop. Okay, then you go to the next one, the red bar. It's close to it, but then we got a couple of green bars that pushed it back into the 2010 level. That's exactly what I said right before I left. Before I left for this appointment. In fact, now I have 4 different appointments here that I scheduled between a dentist, a dermatologist, an allergy guy. It's get it all done all in one swoop, and see you later kind of thing. So the same thing here, when you push into these levels here and things just start rolling over, it's just easier to get it done and get the flush and the sell-off going because the momentum is there. I do the same thing with videos. When I create videos, most of the time, the weekly Tuesday videos, I actually make about 5 of those in one session, maybe 7 of those in one session. And I do it all at once because it's a lot easier, because that's where the energy is. That's where the momentum is. So if you're looking at this, think about it like energy. Where is the energy going? So from here, okay, we started the energy going down, and this was your sign right here. This was your sign that the energy was pushing lower. So what do you think is going to happen the next day? The next day, what happens is the energy still comes from that previous day. So we continue with that sell-off. Now, yes, there's people in the Twitter and stock twits that'll pump up these stocks, and maybe we should do a video about that, reading hype and reading what people say on these social media networks and how to really filter out through a lot of the junk. But, they'll pump it up, or the hedge funds will pump it up, whatever. In either case, they'll pump it up, or the shorts will be buying it. And then again, we continue to move lower. And obviously, you can see I didn't really fake this because you could see the time ticking over here. And this is actually, the charts today on April 21st. So it is a live market. And it's just the natural tendency, you get good after predicting things for a while and looking at things for a while. I can't say I'm accurate 100% of the time. There's no way. I have tons of losses. But it took a long time to be able to learn to read these things. And a lot of this, what I'm reading here intraday, really comes from these daily moves, okay? When I look at these daily moves, if we take a look at the S&P, it comes from these daily moves, okay? Because I'm reading the daily action, the probabilities. I'm reading the daily potential. So if I look at a QQQ, okay, I'm looking at this level, getting into this, filling this gap right there, which is a large gap, and then we rejected it. Look at how much volume we rejected it. So I watch multiple indexes. I'll watch the QQQ, I watch the SPY, I'll look at the NASDAQ composite, which in fact is usually what leads the market, not always. I like the SPX, or like the SPY for the volume. And typically when I look at resistance levels, I look at the range, but really you're looking at the highs on the bars for the day, okay? You look at, where the biggest drop or the biggest pop is off the bottom, and you check that price level, because that's where the most amount of money is either lost or made. Okay, so that's where the price action is. So like, for example, here we have a light little bar, okay, but it went above that little range, so it got into this yellow zone. Okay, because I marked it as a zone rather than just a line. So now you're watching this zone. So now I'm looking, where is the biggest swing point? And the biggest swing point, one of them is right here. The highs right here on this bar of 12/19/2014. Okay, this is the weekly, was 212.97, 213. Okay, another one right here was right around 5/22/2015, but the volume was weak, so there wasn't a large reversal. I'm looking at the spread of that volume as well. Okay, I'm looking right here, Friday, June 19th, 2015. We had a fairly large amount of volume, 631.2 million. So there we had 213.34. So again, 213, right around that level. So you got to give it some wiggle room. July 24th, 2015, not a lot of volume. So I'm still looking. It's still 213, give or take, but not as much volume. We had follow through. Swing high of 210, so 210, 211, 210.68 on August 21st, 2015. Okay, we tried to get back into that, okay, with 466.4 million at 211, couldn't do it, didn't even get to 212. So 211.66, we needed 466.4 million, okay, and we didn't do it. So that means this week, okay, if I look at it, we have 466.4 million. We need 466.4 million, and it is already Thursday. And we're only at 300 million probably by the end of the day. Will we do it? Considering the daily move is about 80 lately, 80. Will we do it? If you add 80, it'll be 380 versus 466. Probably not. Then we have, we reattempted this a couple days later. We had reattempted it, well, let's just say the next week. We sold off on 549. Okay, we tried to go up on 466. We sold off on 549. We reattempted at 542. That was November 20th, 2015. We reattempted with 253 million. Couldn't do it. That was end of November 2015. The next week after that, December 4th, 2015, 677 million, more volume, but still couldn't do it. And then we sold off with 694 million. Look at that. 677 we attempted, but we sold off with 694. Okay, think about that. And now we're coming up on 300 million, add 80, because for tomorrow. So that'll be 380. Do you think we'll be able to do it? Possible, but unlikely. If it does, then it's not really sustainable. It's not as healthy. So that's why when I look at these things, that, you know, the bigger picture, you know, longer term, I'm more bearish. You know, it's a little un-American, I guess you could say. But longer term, I'm a little bearish because we're overextended. Shorter term, this shorter term move, you could say I'm still a little bullish, because what we can do is pull back about 50% between the swing point. So from here from the lows to these highs over here, 50% would put us right down around 196. Even a 200 range would be that would be right at 2,000, right at S&P 500 2,000, which would be that support and resistance line right there. Look at how that goes in perfectly. So even if we retrace to 38.2, that would bring us right at the S&P 2000 level. If we look at this SPX chart, just to show you a little bit cleaner right here, even if we start this pullback right here, you can see how that comes in perfect at the 2000 level. Okay. So anyway, so let's looking at the intraday volume, and the market is still rolling over. You can see the energy is still to the downside. So anyways, this is what you do. If you watch the 5 minute, you know, there's going to be a lot of noise on the 5 minute because of that meta pattern that we talked about. You got this meta pattern, and it's hard to read it. because it's 5 minute. Even on the 1 minute, I don't watch the 1 minute. I was using it earlier as a demonstration purposes. It's very tough to get a clear direction but by just looking at all of this, because you'll see spikes like this and then you'll see sell-offs like that, and you just get confused, especially if you're new. If you're new, stick to the daily. Stick to the daily. It's going to be much more beneficial for you. Trade lighter, learn and work off the daily. When you watch the intraday, you're going to get confused. But for those of you that are a little bit more experienced, I wanted to share with you a little bit more of that intraday action here and how I look at intraday here as this sell-off starts right there. That sell-off initiates, and then how it continues to follow through. And I tweeted about this as well, I believe. Let me take a look here at my Twitter account, wherever it is. So what I did was I tweeted about this, I believe, somewhere in here. Let's see, my tweets 5 hours ago, right around 9:38 a.m., the market's set up to move lower. We've been moving up on lighter volume. So you want to be careful. A day ago, this was right before the close there on 420. Right before the market closed, I went ahead and sent a little tweet right there that said, go ahead and the markets typically don't crash up, they crash down. So always protect yourself. And also 3:15 in the afternoon. I don't tweet that much. That's not my main thing. You know, all the tweets that I do with social media, all that stuff, it's sending out. You'll notice I don't really follow people. I send it out, and for those of you following, whether that's on stock twits or on Twitter, then by all means you get the information and the notifications. But I don't really do a lot of socializing on Twitter that much, unless it's to my Twitter account, because I'm able to manage it here in this panel and in this platform pretty quickly. But you'll notice here, even 3:15, don't be naive thinking stocks will go up forever. I went ahead and mentioned this one. This was a little chart. I talked about it here. This is where they rip out that rug from under. You see this volume coming in. You know, this was the 1 minute chart. You see this volume coming up. It's so light. It's light volume. It was going up all day, and you'll see probably in the social media, what happens is all these people will start to pump these stocks. Okay, so if we look at let's just go to the daily here, okay, and we'll just take a look at this range right here. People talking about buy the dip, this dip. That's not a dip, okay? You buy the dip. And they'll pump it right here, and it takes it all day, exhausted. Think about this after running a marathon. You continue to run a little further. It tries to run further, and then in 1 hour, it takes back just about all of those gains, just about everything, okay? And then you go ahead and now you reattempt, you try to go, you break lower, you try to go ahead and pop it a little higher to retest, because there's those people still in there thinking, oh, this is just a buying opportunity. And it may be. We could go back and retest the 2100 again. There's nothing wrong with that, but how far extended are we? So here, we went up, we tried to retest this 2100, got a little above it, which typically what happens is they spike it. Think about it. They spike it higher. Let me see if there's anybody going to buy more calls, buy more stock, buy more shares. They try to get it above that. And then they take it back down. They rip it. Then again, you get that next pattern right there where some of the shorts, maybe the day traders, will take some profits. Then again, boom, lower. This is how it goes. And then what starts to happen, this is the initial beginning. Now, I'm not saying it's going to happen. I'm not saying we're going to have a massive sell-off right now. We're going to go. I'm not saying that. But I'm saying this is how they start to set up. Okay. If you watch the daily, okay, and you see this same thing that we're talking about on the daily. If you watch the daily and you see the exact same thing happening on the daily as I'm talking about right here on the intraday, then this is how they set up to really move markets. Okay, so what's going to happen then is basically then it'll start to trigger people in this price range. And in this price range at the 2090, 2080, as it gets closer, they start to get worried. Then they start executing sell orders. Then you got people saying, oh, well, this is starting to do an ABC pattern, ABCD pattern. Let's go short. Now we start to go short. The market's turning around. So now you get people on the short side. So all these things start kicking in, and you got sell orders, and then you got people that are working, that are, at a day job, that their orders start kicking in as well. So all those things start to happen, but it doesn't happen all in one day. It's very rare for it to happen in one day. There's only been a handful of crashes there, like for example in 2010, like the flash crash here, 2011, we had some major crashes in here in 2014. There's some crashes that happen in one day, but it's very rare for it to happen, maybe once a year here and there. But in general, things slowly start picking up and accelerating to the downside. They take a couple of days. So here you'll notice when we had this downward action, okay, we had a little pop, exhaustion pop on, look how light volume, okay, very light volume. We didn't get that yet here. So, that's why I say we could still bounce here at 2070. We could still bounce around that level. So anyways, what you may get is how these things start to go is they start slow right here. You get either an exhaustion, they start slow. So here in this bar, it started a little bit lighter on December 30th, 2015. Then we start to pick up more speed, okay? So the next bar is a little bigger. The price spread, the range of that spread is a little bigger. Then the third day, it's even bigger, okay? Then we get a little pop. Now, this fakes a lot of people out. The people that that went in on January 4th, 2016, they go short, the retail traders, but then you get a 1 or 2 day pop. And sometimes that happens because now you have the other people that were ahead or early taking some profits, just half off, a quarter off. And then you get stopped out and you say, oh, I'm too large, and you get pushed out of that position. And then the market continues to follow through. The market follows through and continues to move lower, exactly what you expected. It's just you had that counter trend bounce. Then again, you get 2 days of bounce. Okay, so here we had January 11th and January 12th, 2 day bounce. And then again, rip the rug out, because you got the value buyers, you got the shorts that are buying back their shares. You also have the buyers who are constantly bullish. They'll buy it back right there. Oh, buy on the dip. Market's going higher. And then again, lower. So this is what happens. And they typically start like this with a 1 day, 2 day, then they start rolling faster and faster. So here, okay, getting back to overall the market, what am I seeing? Let's just simplify things. Okay, looking at the market, we're overextended. We're overextended. Can we go higher? Absolutely. Would it be healthier if we went sideways for a bit? Absolutely. If we go higher on lighter volume, I would expect this market to roll over. If we start accelerating volume to the short side, it's going to go lower. A healthy pullback would be right around to the 2000 level. And then if we go sideways for a little bit, and then if we bounce, that would be more healthy. And then I could see this market going higher. But right now, it's a little overextended. It's quite overextended. And in my opinion, for this short term, until we still get major selling coming in, which right now it's still not major selling. We got selling coming in. But until we get major selling starting to come in right here on that next day, the second day, the follow-through day, when you start seeing a pickup on the second day, that's your confirmation. A 1 day doesn't make a trend, okay? So I always say 1 day doesn't make a trend. So even though we're getting this little bearish retracement, 1 day doesn't make a trend. But if you see a second day follow-through on even bigger volume, and let's just take the SPY, okay, right now we got 50 million or so on volume, but it's not the end of the day yet. We still got a couple hours left in the trading day. But if the second day, the next day, we get more volume coming in, then you could see the market start to pick up speed. And that's where you might see 2000, you might see 2072, you might see those kinds of things. But, all in all, the trend has been to the upside. So the bulls are still in control. So you have to be mindful that, you can start this bearish thing at any time. But you can't be naive that the markets are going to continue going higher. You can't be, constantly a bull. You need to trade the markets. Stop thinking a bull, a bear. Trade the markets based on the signals, what they're doing. And typically, when most people are screaming for you to buy, that's when you sell. When most people are screaming for you to sell, that's when you buy. You have to be a contrarian. I know it's a weird feeling, but that's the way you typically have to play these markets because there's a lot of psychology that goes with it, because most people are late or too early. So let me see if I could find a little diagram for this. So here, if you search for stock market cycles, emotions, there's a lot of different diagrams, really. The one I want to show you, you can look through these and just take a look at some of them. But really what happens is, if we just take a look at this one here, what people do is initially they start, the price is going up, let's watch the market. The trend is holding, I'll buy at the next consolidation. Then it's like, damn, I missed the consolidation, but I'll wait any long. If I wait any longer, I won't profit. Let's buy. So they buy here at 0.3, and then it's a good thing I didn't wait. Then the market starts to sell off. Here it's starting to roll over, and then I'll use this correction to increase my position. But they're unaware that now the move is ended. The extension was too far. And then, brilliant, at this price, let's double it. So then they're at number 6, and then at number 7, you're starting to hurt. Number 8, you don't believe it, and so forth. You keep going through this crash, and you go through this, and it becomes very emotional. And by the time you hit this step 11, you're enough. You're out. You're staying out, or you're holding on to your position, hoping and waiting for it to come back. And then you start repeating this process. Really, good thing I sold everything because the market keeps going down. And then it starts to pop. Then you say it's going to tank anyway. Then it comes back, and then it says, "Oh, I told you." Yep, it did tank. Then it started to pop, and then it's and then it starts continuing on this next cycle. So you're going through this. This part is really the cycles that we're looking at. Really, is this distribution part right here near the 0.3 and 4. Even 0.1, 2, and 3 and 4 is kind of distribution. And then you start to get that market sell-off. Then again, you get distribution between 12, 13, and 14, which is healthier. And then again, you get accumulation. Okay, so it's a market pop. So there's 4 cycles to the markets. You basically have the accumulation phase, which moves sideways. Then you have the markup stage, which pops the market. Then you have distribution, which again goes sideways, but it's at the top of a cycle, at the top of a buying pattern. And then again, you get the sell-off. You get the markdown stage, which sells off. So here you can see all 4 of those cycles. They're not presented all perfectly, but if I show you Tesla right here, you can see all 4 of those cycles really clearly, just because it's already really gone through it. So here we have the accumulation stage, which lasted a few years. You have the markup stage right here, which you could say goes through a couple of markup stages. But let's say, okay, this is our markup stage. Okay, then we have some distribution stage right here, and then partly markdown. Okay. And then again, you'll get some of this, again, accumulation, markup, okay, then distribution, and then markdown stage. Okay, so we go through these stages, and sometimes if you're looking at a little bit more of a zoomed in version, so let's look at maybe a 3-day chart. So here you'll get your markup stage right here. You'll get your distribution stage, markdown stage, okay, and then you get partly a little of accumulation, but really this is just a partly retracement, because here we have the A to B, B to C, C to D pattern. Okay, so the pattern wasn't fully complete. So anyways, really, if as you start taking these things even bigger and deeper, you want to look at all these patterns, all these time frames, because now you could say that this technically is a distribution stage. So we had accumulation. It depends on the time frame you're trading. If you're a short-term trader, longer-term trader, then we had a markup stage. Okay, now we're in the distribution stage, and then could we have a major mark down or sell-off stage, which would be somewhere at the 109 level? We could, or we could power higher right here, which could create A to B, B to C, which would be sideways, and then a C to D could go to more of a more to the upside. We could do that because B to C sometimes will do sideways, but again, it depends on the time frame you're looking at, because look at the volume again coming in. We had a volume descending right here, and now again we could see it on the next stage. It's a tough stock. Tesla is a tough stock. It has high short interest. It's very difficult to trade. Typically, you got to be on your game when trading Tesla. But anyways, looking at the cycles, that's really what you're watching. It doesn't matter which stock you're looking at, whether that's a Disney, and you start looking at it, you can always find those cycles, depending on what time frame you're looking at. Here's the monthly time frame. And again, you'll see those things. Look at this markup stage right there. Okay, you had slight distribution right there. Okay. We didn't have a markdown stage on that level right there yet, but it happens. Whole Foods. Okay, if you look at Whole Foods, okay, it goes through that as well. You got the accumulation early on. Okay, markup, little distribution, markdown, and then again, little accumulation, markup. Okay, then you got distribution that happens here, and then markdown stage. Okay, so they go through it, and then the next step, what do you want? You want to see accumulation. You want to see accumulation sideways, a sideways pattern. That's why I always say sideways is healthier. So for me, when I look at this market right here, if I look at it sideways, if I look at the market, I want to see it sideways, because that would be good accumulation. But if we don't see that, that's why I say it could roll over. So if we look at these, oh, there we go. And you can see it's starting to roll over even further. So yeah, because my TC2000 is 15 minutes behind here. So you can see here, continue to roll over, and you'll probably see in, let's see, StockTwits or wherever, right here, there's probably going to be some, bulls in here that'll just, pump it up, buy it, things like that. So if you look through this, you'll probably see some people that are definitely pumping the stocks. And this is what they do. It's bullish and line in the sand. There's a lot of people that do that. And some people do. They buy on the dips, but, it becomes painful. If you don't have tight stops, here's bearish. Most of the people for today will be bearish. But in the morning, you probably, if we go back to the morning, you'll probably see a lot of people that'll be pumping this. Let's see here. We're still at 226. I wonder if I can get down into the early morning tweets here, that you'll probably see a lot of people pumping it to go bullish, and that's okay. There's nothing wrong. You got to have a market. You got to have bulls and bears to be able to have a market. So here you could see just bought the dip, delicious, at 2:05 p.m. 2:05 was right around here. There was that dip. I don't know. Okay, so bought the dip. So I don't know. You got to decide who to follow. Maybe we can do something regarding following people or learning from people or traders. That might be a different lesson, but you'll see that in the early morning sessions. I mean, we're still at right here, 1:46 in the afternoon. You'll probably see more bulls right there. Don't let me down, buy the dip. We're almost at 211 yesterday. Okay, so you'll have some of those bulls there, and I'm not saying they're wrong specifically. I'm just saying that for the day, their time frame might be for 2 minutes. They might be holding that stock for 2 minutes right here. They might have bought this dip, wrote it up right here, and gotten out. Because are they going to tweet out every trade? No, they're not. Can I tweet out every trade? No, I don't have the time to do that every single moment, because for me, once the position is on, why do I want to do that? Why do I want to have headaches to trade? I'll day trade from time to time, but why do I want headaches to, buy this tick, sell that tick? I make more money just sitting and being patient. If you can sell at the tops right here, once you see this somewhere over here, you don't have to get it perfect over here. You could even get it next day, comes back to retest the 2010, sell it short, and boom, you write it down. Be patient. Why go in and out and in and out? Same thing like I said with the doctors. I got to go a second visit and a third visit, and we're going to double check. Do everything at once, One of the funny things I did back when I was in college with these doctor visits when I had my wisdom teeth pulled out, we actually made 2 appointments, not by mistake, but we made 2 appointments just in case to go back a second time, and because you have a 24-hour cancellation notice. So I made 1 appointment at, let's just say, August 1st. Okay, that was going to be the checkup, and they told me they're going to say, oh, we're going to do a checkup August 1st. And then they said probably within 2-3 weeks, we'll go ahead and pull your wisdom teeth. And here my teeth are hurting. They're pushing on the side of my other teeth. And then what I did was I went ahead and I called in. I made a second appointment, and I needed to get these suckers pulled, And I made a second appointment for 3 days later. Okay, again, consultation. So typically it's 30 minutes for the consultations, whereas with the procedure it's 45 minutes or an hour. Anyways, long story short, when I went in for the consultation, the doctor said, okay, yeah, they need to come out. Why don't we schedule something? And we go ahead and we say, well, we have an appointment in 2 days, and he checks into it and he says, yeah, it's a 30-minute appointment and procedure would probably take 45 minutes. And go, well, would you want us to cancel the appointment, or would you want us to, cancel and reschedule, or do you want to just do it then and we'll come in a little early if you want? And what do you know, went in, got it done, took care of it, and, got in on time. But that is just trying to watch what's about to happen, predicting the future, predicting the outcome. And, it's not always going to work out in your favor, but you do what you can in the most honest, ethical way, and get things done, get things taken care of all in one swoop. Because otherwise, between filling out paperwork, checking in, how are you, all these things, they take time. They take time, energy, and and if you can just be patient and do it all in one swoop, ride the trend down. Here you can see A to B, B to C, C to D. If you can do it all in one motion, you'll be much more successful. It'll be much more rewarding if you can bulk things up, just like bulking up my video lessons, bulking up, your tasks that you're doing. Do it all in one day. If you're doing gardening, do all the gardening in one day, rather than, okay, tomorrow I got to do more gardening, and then you have to change your clothes, and then you have to, get out the shovels, get this out, get the lawnmower out, all that stuff. So anyways, that's basically the review and session I wanted to share with you on the market today. I mean, you have to watch for a second day follow through on what's going to happen here and what's going to continue moving, because we could get a counter trend bounce tomorrow and retest this 2100. Because sometimes what they'll do is they'll come back to this level and then they'll bounce and retest it, and then they might roll over again, or they'll bounce or move sideways and then they'll power higher. So you have to be patient to spot these little signals, and those little signals and things we talked about on the intraday, take those and apply them to the daily and the weekly charts, because that's going to give you a more firm support and resistance line. It'll just be more viable. It'll be more sustainable, more worthwhile. So anyways, I hope this gives you some insight to the intraday, looking at the intraday, just about the insight of how I look at things on the intraday. I really don't watch the intraday that much. If anything, I'll watch it on the 15-minute. I'll look for some base levels, but then really I'm looking at the daily right away. I'm looking at the daily, and that's it. I make my decisions on the daily. So if I can emphasize that to you, focus on the daily and the weekly. The weekly will tell you more of a longer term. And that's where you make your decisions. And then if you scan it, if I'm scanning just a 15-minute, I'm scanning for how the price action is. And I usually will check 15-minute, maybe 30-minute, because I'm watching to see this volume. Where is that volume? Is it light volume? Because if we're popping on light volume, I really don't care. It's not important or relevant, because it's important in the sense where I'm getting ready for something. And you can see that based on Twitter, based on the feeds, the things I mention. I'm not going to give you an exact entry or exit point, but things to watch for. And if you're ready and if you're patient, I want you to succeed in this business. I want you to get it, because you need to really be patient. That's probably very tough for a lot of people. It's probably one of the toughest things to learn. But it's going to pay out big if you can learn to master your own internal self. So do some studying. Maybe watch this video a second or third or fourth time. Maybe it'll help you review those charts, diagrams, and start focusing on your trades, your own trading. And if you start following people, follow 1 or 2 or 3 people that you can relate to. But then you need to understand why they're choosing what they're choosing. Not just somebody that just says, I'm bullish today, I'm bearish today. Understand why they're making the picks that they're making, and then you can apply it to yourself. Why are you making the pick or why are you going bullish? Why are you choosing to go bearish? You need to decide that for yourself. And then that way you can see where you're making the mistakes, where you can improve on. Because then, you say, well, I won't do that again. And then you continue saying, I won't do that, I won't do that. And eventually you'll get to things that you do successful and continue creating a system out of that. Anyways, I hope this was helpful. It was a little bit different of a video, more intraday charts, but you apply it to the daily, it makes a lot more sense. And, hopefully this was insightful, because I wasn't really sure what time I would get back, so I pre-filmed a few of these little segments early on in the day to make a nice little recap for you, just because with these doctor's visits and so forth. So anyways, enjoy the rest of the day. Thanks for joining me. Thanks for sticking with me. And most importantly, remember, it's more to life than money. Go out, do what you love, contribute to other people. But most importantly, live life abundantly. Trade them well. Take care, and I'll see you next week.